Hello and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about what are points? What are mortgage points? What are origination fees? What are mortgage points? What does this mean? All right, so simple answer. A point is nothing more than a percentage point. All right, so think of anytime somebody says points, just think of a percent. So if it's 1 point, that equals 1%. 2 points equals 2%. 1.37, 1.37%. And that's based off of the loan amount. Okay, and these points can be for different reasons. Oftentimes it's to buy the rate down. So if you're going to buy a rate down, you might be paying points. Sometimes based off of your credit score, the loan product, how much you're putting down, and a lot of other factors, the rates may come with points. Depends on the lender and a lot of other factors. So a lot of things that go into that, but understanding what a point is critical. So how do points work? Let's take a $200,000 sales price, for instance, and you're going to put 5% down on a conventional mortgage. Okay. Of course, you could do 3.5% down on an FHA and 0 down on USDA, et cetera, et cetera. In this example, we're going to use 200,000, putting 5% down, which is 10 grand, which leaves you a loan amount of $190,000. If you pay 1 point on this mortgage, that's $1,900 in fees. Okay, because a point is a fee. All right. If that is the case, then what are you getting out of that? Now, is that actually, buying the rate down, or what's happening with that? Is it just what comes with it? Is that what the lender charges? And those are questions that hopefully your loan officer is being a loan advisor and is explaining. In this scenario, let's say, and I'm making up this interest rate because for compliance reasons, I'm pulling this out of thin air, just for math. So if you had a 6.5% rate, and you were buying it down to a 6%, and it happened to cost 1 point, again, making this up, it can run the gamut, okay? But let's say that from a 6.5 to a 6% costs 1 point. So it costs $1,900 to buy it down to a 6%. Well, what does that save you? So on a $190,000 loan amount, principal and interest on a 6.5% interest rate would be $1,200.93 a month. That's amortized over 30 years. Just math, no magic. If you bought the rate down to a 6%, then the principal and interest would be $1,139.15. Again, just math. The difference between those two, so in other words, by saving 0.5%, you're going to monetarily save $61.78 a month, eventually. And the reason I say eventually is because the first thing you need to do is figure out the recapture value. Does it make sense to buy it down? So if you take the $1,900, which is 1 point, divide it by the savings that we said was $61,078, you're going to come up with 30.75. So essentially that's 30.75 payments, or 30.75 months that you would have to make a payment before you actually started to save $61.78 a month. Now this is important because it depends on not only how long are you going to be in the home, but how long are you going to be in the loan. As of the time of this video, rates are actually higher, and we do expect them to go down. So anybody who's buying down their interest rate right now may find that they're going to refinance back into a lower rate, and they could have saved the money to begin with. It just depends. You have to have a loan officer that is a loan advisor and explains what's going on with this and what is the math of it, because we need to be tactical, not emotional. All right. So when you actually do the math and you have a loan advisor explaining it to you, it may or may not make sense to buy that rate down. Okay. The higher the loan amount, obviously a point, it's math. So a point on $400,000 is going to be $4,000. A point on $100,000 is going to be $1,000. So it's just a percent. Takes away the mystery, right? Okay. So the other piece to this that you have to know, points are not in and of themselves good or bad, right? Again, you need a loan advisor. But when you're shopping for a mortgage, some big box lenders, and I'm not going to name any names that you might have in your pocket, but a lot of them actually charge a lot of points up front. And the reason for that is because people are emotional when they're buying a home, and the sales aspect of it says, what is your rate? Your brother, your cousin, your parents, your uncle, everybody's asking, what rate did you get? What is your rate? So people become fixated on an interest rate. So what happens is you can get any rate that you want. The question is, what is it going to cost you in points? All right. So if you don't know that, then some of these big online lenders will just give you a rate that sounds sexy and you're like, yeah, I got a great rate. But you don't realize that you're paying out the nose for that rate and it's not the best deal. So you have to understand the cost of it, and then you can shop around. And that's why your local lenders tend to be better for you, because they have your best interest. They're in the community and they want to help you, as opposed to being transactional. They want to be relational. So that being the case, understand that points, you have to understand the cost and what that really means in the market. Now, depending on your credit score, how much you're putting down, the loan size, the loan product, a lot of different factors, some loans may come with points, just the way it is. If you have a very low credit score and you have a very low loan amount, then depending on the market, it may just come with points. And that ebbs and flows with what's happening in the market. I've seen, low credit scores with low loan amounts have no points, and I've seen them come with 1 or 2 points, right? So every one of these is individual, and you just have to know that. So, but points are nothing more than a percentage, and that takes out the mystery. So when somebody says, hey, does it come with a point, or what does it cost to buy it down? How many points? That's all it is. It's just math. Until next time, leave comments below, and it's all for one and one for all.